Welcome to the Social Impact Investing webinar series presented by OZ Pros and Crowdcreate. This is our very first episode, so a very special thank you to all of our attendees for joining us today. We are very pleased to have as our first guest, Jeanne Bonds from the University of North Carolina to discuss impact investing history and trends. Before we get going, a couple of notes. Yes, this webinar is being recorded, and we're going to send all of you a link to where you can view this webinar at a later date. We'll send that email out later this week, but everybody will get a notification about that. 2, yes, there will be time for some Q&A during probably about the last 15 to 20 minutes of today's session. So if you do have a question for Jeanne or any of our other panelists, please click on the Q&A icon in your Zoom toolbar. There's also a chat function that you can use as well, although we won't be moderating the chat as much. So please, if you do have a question that you'd like posed to Jeanne or the other panelists, I do encourage you to use the Q&A icon, please. And then 3, also throughout the webinar today, I'll be asking all of our live attendees a series of poll questions. These are completely anonymous, and although they are optional, we would greatly appreciate everyone's participation. They'll be very painless, I promise you. And so now allow me to introduce today's panelists. I'll start with myself. I'm Jimmy Atkinson, founder of the Opportunity Zones database at opportunitydb.com, host of the Opportunity Zones podcast, and I'm also the co-founder of OZ Pros. My OZ Pros co-founder, one of our panelists today, is Ashley Tyson. He is a business attorney and Opportunity Zone consultant with extensive real estate investing experience. He's based in Charlotte, North Carolina. Ashley, could you please say hello and tell us a little bit more about yourself and OZ Pros?
Well, thanks, Jimmy. It's a pleasure to be here today and participating on another great informational webinar with you and with the guests that we have today. I'm a huge Jeanne Bonds fan, and so I'm really looking forward to this. My background is I'm a reformed attorney, so I like to kid around about that, but keep falling off the wagon and falling back into doing deals. I've been practicing for 20 years. I actually sold my M&A practice to help business owners to keep more of their money that they make and also to utilize their businesses for impact. And as part of that, I stumbled into the Opportunity Zones while I was at a CLE. And so started down that road and then ran into you at the Opportunity Zone Expo back in Vegas and used at OZ Pros, we harnessed a document generation tool that we had developed for M&A transactions and specifically repurposed that into Opportunity Zones. And so we specifically wanted to be able to give small business owners that are the backbone of our economy access to be able to actually do Opportunity Zones. And so we provide real estate entrepreneurs, small business owners, and community stakeholders with a simplified process for learning about Opportunity Zones, getting compliant with regulations, getting their deals set up and ready to pitch to an established network of investors, and then ultimately get those deals funded. Namely so that Opportunity Zone capital can catalyze impact in the communities that need it most. And I'm excited to be talking about impact today.
Perfect. Thank you, Ashley. And joining us in sponsoring this Impact Investing webinar series is Will Walker from Crowdcreate. Will is head of business development at Crowdcreate and specializes in connecting capital with innovative business projects. Will, could you please say hello and tell us a bit more about yourself and Crowdcreate?
Great. Thanks, Jimmy. Yeah, it's wonderful to be here and be partnered with OZ Pros, number one. I've had the pleasure of meeting and talking with Jeanne Bonds, our speaker today, before, and I know it's going to be exciting and informative for all of our attendees. But my background is private equity, 27 years. I've been raising money a long time and dealt with all sorts of investor profiles, classes, different types of offerings, helping to structure them as well as to introduce and actually transact the actual investments to the sources, to the issuers. Crowdcreate, the firm that I'm the head of business development in, has been around for 5 years. We've raised over $130 million. We're connected to over 45,000 qualified high net worth retail investors, as well as many institutional investors, hedge funds, family offices, angel investors. And we're known for our strategic content and really both video and print strategic content at finding, identifying, and placing the right investor profile with the right project. So we have a very extensive strategic custom roadmap that we give every project and company that we work on, and hopefully many of them that we're already working on with OZ Pros, to really come back with the results quickly to save you time and money in finding and introducing the right investor profile, and then leading that into a transaction, an actual transaction. So it's really a pleasure to be here. I can't wait for this series for today, number one, with Jeanne, but also I know we're going to have a very eventful and highlight a lot of cutting edge companies and projects in our future series. So really excited about being here. Thanks for having me.
Yeah, perfect. Thank you, Will. And now, of course, our special guest on today's episode is Jeanne Bonds. Jeanne is director of the Invest to Sustain initiative and professor of the practice of impact investment and sustainable finance at UNC's Kenan-Flagler Business School, located in Chapel Hill, North Carolina. She was also formerly director of community economic development for the Federal Reserve Bank of Richmond. So we're very honored and very pleased to have her here with us today. Jeanne, thank you for joining us on this webinar series. And let's dive into your presentation now if you'd like to begin sharing your screen. And while Jeanne gets that all teed up, Jeanne, are you able to do that all right?
I am.
Perfect. Okay, while Jeanne gets that teed up, I'd like to throw our first poll question to our attendees here today. The first poll question, we want to know what everybody's level of experience is with impact investing. So again, you know, these aren't mandatory that you answer these, but we'd really greatly appreciate everybody's input. What is your experience level with impact investing? Are you very experienced, somewhat experienced, or do you have no experience at all? So these are completely anonymous poll questions. We won't hound you about how you answer. Don't worry about that. So please do feel free to be honest and open with how you share your responses here. And I'm going to close this poll here in a few more seconds. I'll give everybody just 5 more seconds to participate here. And we are cutting it off. So I'll share the results here. And you can see that we do not have a lot of experience in this group, which is actually great, I think. So a lot of people getting turned on to impact investing. It looks like only 6% of our audience mark themselves as being very experienced with impact investing, and a little more than half have no experience with impact investing. So Jeanne, this is your audience today, so you know how to kind of tailor your presentation, and we're really getting a beginner group here, which I think is phenomenal, and I'm really glad that we've opened up this new type of investment to these individuals. So Jeanne, without further ado, please take it away.
Okay, great. Thank you, Jimmy, Will, and Ashley. So here's my contact information where you're all free to contact me after this, but I'm gonna really start at the beginning and talk a little bit about the history, because we all hear impact investing, but it's actually, as you can see, actually pretty old. 1500 to 1300 BC, Jewish law talked about ethical investing. The Quran talked about certain types of forbidden investments. The Methodists resisted certain types of investments in the 18th century. We had Quakers not interested in investing in slavery or war. And the first fund, the Pioneer Fund in 1928, which is actually still in existence. And then through time, as other social conditions arose, whether it was the Vietnam War, apartheid, other types of activities, we constantly came back to this discussion about how to make ethical investments, how to make investments that reflected certain values. So the Vietnam War, we had protesters demanding that university endowments not invest in defense contractors. So a pretty lengthy history thinking about investing money and how to match that against values. And so that's really the start for impact investing. Now, I think it's always prudent to talk about a lot of the policy activity because we wouldn't be where we are. We wouldn't even be having this discussion about impact investing if the federal government largely had not made investments in this topic as well. And that goes all the way back to the 50s when the Small Business Administration was created. So we know SBA today because we're talking about payroll protection program loans as we come out of the pandemic. But much further back under the SBA, they created something called Small Business Investment Companies in 1958. They were very focused on real estate investments. There were some changes made to the legislation so that federal leverage entered the equation so that you as investors were raising money for this investment company, and then the federal government could come in with leverage that fund could then pay back. So as time went on, we started going more and more to how you could invest in low and moderate income zones, places that really needed that type of investment. And then through the Community Reinvestment Act, these small business investment companies became an immediate qualified investment. So the federal government was really the first impact investor. And if you go to SBA right now and take a look at the form you fill out to create a small business investment company, you'll see different types. One of those types is an impact investment fund. So that dials back in terms of policy to the 50s. We then saw the Appalachian Regional Development Act that created the Appalachian Regional Commission, which was the first kind of place-based impact investment tool. And then we went for quite a while and saw the Tax Reform Act of 1986, which instituted low-income housing tax credits. So there's a lot of other legislation in between here that I won't go through the details, but just to know with the Civil Rights Act, there were a whole series of pieces of big legislation that focused on equity and equality, kind of culminating in the Community Reinvestment Act of 1977, which basically directs deposit-taking financial institutions to lend, provide services, and make investments. And again, that's focused on low and moderate income communities and underserved communities. So a whole series of legislation led up into that particular act. As time goes on, we see more things come out of the federal government on the policy side. Community development financial institutions enter the picture with the Regal Community Development and Regulatory Improvement Act in the 1990s. Again, we've got the federal government making investments. So we have a Community Development Financial Institution Fund in the Department of Treasury. We have New Markets tax credits, which are, again, the federal government investing in these tools. We go on, we have empowerment zones, enterprise communities, renewal programs, until we get to the Opportunity Zone Act that this audience is very familiar with in 2017. But wait, there was one more act that came after that that you probably don't know about, which was 2018, called the Social Impact Partnerships to Pay for Results Act, which actually creates a fund in Treasury for pay for performance or pay for success type of projects. Again, another social impact program. So clearly, we are talking about impact investing because at the federal policy level, there have been decades of the federal government investing in this tool. Now, why is that? Environmental and social reasons have really driven this. We saw a lot going on with the environmental movement, dialing back to the 80s with Chernobyl, the 3 Mile Island nuclear accidents, apartheid. So we really saw the institution of a sustainable fund, which investment form in 1984. And so we really started to have these organized conversations about impact investing and how to match those values with the communities that need the investments. And this is just a handy dandy chart of all of those different types of activities. There's a couple other points in here I would bring up. Philanthropy. So philanthropy is really having a solid discussion now about systems change and impact investing. And you'll see a kind of a watermark in this timeline, which is really the Rockefeller Foundation, which starts to launch a lot of activity around impact investing. The Ford Foundation did that as well. We start to see reporting on impact investing with Bloomberg. And then we saw a major White House convening in 2011 that brought investors, policymakers, entrepreneurs all together to talk about impact investing. So a very old thought that is now really part of our everyday conversation and language. So what is going on in impact investing? And for my panelists, if you guys want to jump in and ask questions, just, let me know.
I do have a question for you,
Yeah.
actually, Jeannie, before we continue on, and maybe you're going to talk about this a little bit more later in the presentation. But you brought up opportunity zones earlier, and that's obviously, I'm very involved with opportunity zones myself. How does the opportunity zones tax incentive differ from a lot of those other federal programs that you were discussing before, both in terms of the mechanism and in terms of the amount of impact that it can create, the volume or magnitude of the impact that it can create?
Well, it has a couple of major differences. So I would point out that the original legislation to create opportunity zones had what I call some guardrails in it that guided particularly how the zones would be chosen. So you would be choosing zones that had some type of investment, and you might have some other guardrails that were really designed to protect the community. Because that was stripped down and it was passed in a larger piece of legislation, most of those guardrails fell out. But the main difference is that all of those pieces of legislation that I talked about previously, as it went to low and moderate income or underserved communities, there are really clauses in that to ensure that those investments are actually benefiting the community. And the opportunity zone piece does not have those. So what I would say to the audience is, if you really want to make an impact on those communities and you really want to create long-lasting investment that moves those communities forward, which was the ultimate goal of it, then you'll consider the impact investment, even though those claws and hooks aren't in there like they are new markets tax credits. Now, some of you could absolutely argue that new markets tax credits is burdensome because you have to create community advisory groups and adhere to some rather rigorous criteria. But ultimately, those new markets tax credits projects really do benefit the community. So it's a bit of a balance, and I'd say the opportunity zone piece leans more towards benefiting the individual investors instead of the community at large.
Right. Yeah, no, that's a good point. Those are some good differences that you point out there. One other big difference, I think, is the pool of capital that's available. This isn't a grant program or a tax credit program that has any particular cap on it. Right? I'm talking about opportunity zones now. There's no limit to the amount of money that can be raised by opportunity zone funds.
Mm-hmm. Correct. It's capital gains, anybody out there. So the universe and the potential is much larger than the other programs. Absolutely.
But you're right to point out that it does lack a lot of the guardrails that these other programs do have, for better or worse.
Right. And then I think a big challenge is because it's literally anyone in the US with a capital gain, and you've got more than 8,700 zones all across the country. The early stages of informing people about what it is and how it works. It's not a program that belongs anywhere in any one agency. So that was particularly cumbersome. And I guarantee there are people out there with capital gains that still don't know what it is.
Yeah. Jeannie, I just want to throw in there too, it seems like the guardrails you're talking about may be a little bit in the beginning cumbersome, but it could really be, it can ensure some stability and sustainability, more important, because we know there's a runway for, the tax credits and the profits to kick in, especially in some of these urban areas and urban projects, as well as rural projects, right? So I think an ounce of prevention's worth a pound of cure. Sometimes to pay attention to those guardrails.
Yeah, and to have a long-term focus, I think if we drive the market more towards the impact investments, then the potential for this program to continue is going to be much greater than if that doesn't happen.
Yeah.
So I'm going to play devil's advocate on that, and I'm going to throw it out there that I actually think that maybe the way that it happened actually benefits us because, none of the other programs have gotten the attention of private capital. So this is the first legislatively created program that's actually gotten the attention of private capital and has gotten them moving in the direction of taking action on it. And so, perhaps what happens now is that maybe we put some of those, impact guardrails on it in order to kind of, to further it and to move it into the next phase. But, I'm going to say that without having the guardrails stripped off, I think really got a lot of people interested in it because of the pure kind of economical benefit that it had to it. And so now I think that, it's up to us as leaders in the space and as, folks that are working in this stuff to really be advancing the ball on impact and to be calling people to account. But then as well as to be walking with the legislator on saying, okay, here's how we can do some of this stuff in order to keep private capital interested, but we can kind of channel it in the direction of getting the results that we want that you're talking about, Jeannie.
Yeah, I mean, I definitely agree with that. But if you look at the urban low and moderate income tracks that were chosen for the program, you've got an awful lot of displacement of people taking place. And you've got housing costs that have been rising, which pushes the people that most need that housing in the city further out. And then in the rural areas, you've got a real disconnect between that growth. So as much as the market could embrace impact investing and people can act on that, it's great. But from my perspective, it would be nice if there were some incentives built in that really motivated people to go towards that. Otherwise, you can end up with a lot of real estate deals where you've got some buildings that are refurbished, but then nothing happens in the building. So correct. I'm most interested in the business investment piece, and I don't see that much happening with that business side right now. So I'd like to see some more incentives built in.
On that, we're trying to facilitate it, but yeah,
right,
agreed.
Right.
I agree with you that the lion's share of it's real estate. So yeah, we need to do something about it.
Yeah, and we could build. I mean, there could be incentives built in around the impact side. If we could all go rewrite the legislation, we could certainly add those in.
And there's ways to streamline it to appeal to investors like myself and our crowd as well. So
yes. And one of the things I'm going to mention is if you don't have the desire to learn how to be an impact investor, or you aren't going to set up an impact investing fund, that's okay. You can still partner with entities that are creating impact. You could still get your market rate on it, but you could still be part of some system change. So I think there's still some ways for people to be impactful no matter where they sit on that continuum. So a lot of
agreed. Oh, sorry to interrupt. I want to get you back to your presentation because we've got a lot of ground to cover and you've got a lot of good stuff in there. And I want to make sure we leave time for questions at the end. I just wanted to remind our attendees that we do have a Q&A feature. So if you have any questions for Jeannie or any of the other panelists, please use the Q&A function. I'm seeing a lot of great networking happening in the chat room where people are posting their LinkedIn and a little bit of information about them. That's fantastic. Please keep that up. It's great to see everybody in here today. We've got a really, really great engaged audience. So again, use the Q&A function if you have questions for Jeannie or any of the other panelists. And Jeannie, I'll turn it back over to you to dive into the trends now.
Yeah.
Thank you.
Yeah. So let me point out a few more recent trends in this direction. Many of you may know that the Business Roundtable, 181 of the largest corporations, their CEOs, met last year and started to talk about the purpose of a corporation and benefits to stakeholders, not just shareholders, but stakeholders, which would be that larger community that we're talking about that could benefit from this. So that's kind of a major milestone because that means that companies and investors are starting to have more conversation about positive and negative impacts of their investment, as well as who do they consider in it? Is it just the shareholders or is it all of the stakeholders, the people that live in the community, the people that buy their products, their supply chain, and how do you look at that much broader ecosystem? So we are seeing a lot more focus on more than just a risk and return, but that longer term impact, which requires measurement, that more meaningful system change. And I think it's important to realize that impact investing is not just an asset class. It's not just a structure, a form, or a tool. It's a much broader way of looking at how you use your money to affect change and how you're going to measure the impact of that change. So a lot of local, national, and global trends taking place with this. And I think one of the keys is the potential size of the market. So there's a lot of different estimates, but it ranges from 500 billion to 12 trillion, which is a huge amount of money. And every year, the GIN, which is the Global Impact Investing Network, does a survey. And their most recent survey looked at 239 billion respondents managing potential funds for impact investing. About 56% of those targeted social and environmental objectives, 36% targeted only social, and 7% only environmental. So that's a pretty large pool of money out there, certainly not all of it, but a large amount. And people are looking both at social and environmental impacts, which is good. We have a whole new set of investors. So if you've got a fund or you're looking to attract investors to a project, there's a lot going on with this. We have generational wealth transfer, where it's estimated that about $30 trillion is going to be changing hands from one generation to another. And I think we all know through the demographic trends and otherwise that that next generation has some different ideas about purpose and impact and value statements, just like I pointed out in the 60s with some of the conversations about impact investing then. Women, I'm happy to say, are going to be a huge part of this piece of the investment puzzle, because women are starting to be more in the decision making and will control about 60% of the wealth. So you've got women who tended to be a little bit more towards that social and environmental change, making a lot more of the decisions and having more of that money. You've also got a lot, I showed you all the policy mechanisms, but you've got a major shift taking place with philanthropy that started with some of the large philanthropic donors like Kresge and Rockefeller and Ford Foundation, where they're using their sizable endowments in a social impact way. So that's causing all of philanthropy to think about, do we do small grants scattered around, or do we do larger amounts, and can we invest that and actually get a return and actually think about making a system change in a community rather than helping nonprofits operate or scattering smaller funds around. So there's a lot of conversation in the philanthropic community about how you use that wealth for social impact. And then there's a potential for collaboration to achieve that capital stack. So as philanthropy is looking at change, as you've got public tools that are changing and are a bit more impact investment oriented, everyone's got more of an opportunity to figure out how to layer and leverage those different types of capital together. So I think it's if you're in the policy world, you think about this all the time, and the philanthropic world's starting to think about this too. So I think if for investors, consider that there are a couple different types of system change. There's the place-based, which focuses on a geography or a community, very much what the federal government has done. I'm going to look at this place, it's low income, and make targeted investments. One of the earliest programs, community development block grants, very focused on place-based change, job creation, how you affect that broader community to bring investment in. The second type is people-based systems change. Can we improve the conditions of a population? An example of that would be the Earned Income Tax Credit, one of the few tax credits the federal government does, which is targeted on people and how to give people that needed support in a system change. The federal government completely errs on the place-based side because it is easier to invest in places than people because people move around. So purposely, the policy has been driven to that place-based change. But if you spend time in the philanthropic community, you will see philanthropy that focuses on place and philanthropy that focuses on people, or a combination. And the third type that has really entered the conversation is institutional based. So we're going to focus on an institution as a hub for a community, or the small business startups, and we're going to work with this institution, or we're going to work with a community college around workforce development, or a healthcare facility. So we're starting to see a lot more of the institution-based approach to systems change. Regardless, the way you look at the impact is the same. As an investor, as a fund manager, you're going to be interested in the outcomes. You're going to be interested in that population of stakeholders and how you relate to them, the geography, what scale of investment you're making, how long the investment's going to be. One of the issues about opportunity zones is just how long a process that is. It's not get in and get out, but you actually have to keep your money in there for a duration. And then of course, contribution and risk. So there's quite a few examples of impact investing taking place at the regional level, and also with cities as being really the lead in terms of setting up these different types of funds. If you saw 60 Minutes a year or so ago, you heard Jamie Dimon with JP Morgan Chase talking about a huge $15 million impact investment in rebuilding Detroit. A lot of that around small business and home ownership. Clearly an impact investment that financial institution made in a place-based system change in Detroit. You've got some that are very focused on city in particular. There's a Propeller Social Venture Fund in New Orleans. You've got activity taking place in Louisville around the Russell neighborhood, a place of promise. St. Louis has a local fund. DC has a fund focused on incubators. Calvert Capital did a big launch of small dollar, really crowdfunding type investments in city initiatives in Denver and in Baltimore. So more and more you're seeing cities, local governments, regional, take that approach to set up those funds, even starting to see some equitable development funds. And there's lots and lots of examples. Atlanta, the Bay Area, and then we had this enter the space with opportunity funds. So Kresge and Rockefeller specifically put out an RFP to look for fund managers to do a social impact opportunity fund. They wanted to make sure that if they invested, that jobs were created. So they wanted that social component built into an opportunity zone fund. PNC Bank has an opportunity fund that is a social impact fund. They connected the investments in their fund, and I'm happy to say one of their investments is in North Carolina in a small rural community called Pembroke. And they connected those investments with their Community Reinvestment Act lending and investment and services. So serving low-income communities and making sure that those investments led to social impact. Appalachian has Community Capital Fund, and I mentioned the Calvert Fund.
Hey,
so a
Jeanne,
lot of
before you move on to growth, I just wanted to interrupt you. I wanted to re-engage our attendees here, so I'm going to throw up a second poll question. Will, in particular, was curious about this one. I'm going to launch it now for everybody. You can see it here. Do you have a project or company that you feel would benefit from an impact investment? Are you looking for dollars from impact investors potentially, or do you have a project, whether it's real estate or business, innovative business solution that would benefit from impact investment, or that you might qualify as being impactful or creating positive social impact? So I'll give everybody a few more seconds to answer this one. Again, these are totally anonymous, very painless. If you want to answer it for us, that'd be great. And I'm going to end this here in about 5 more seconds and then share the results. So hurry, get it in really quick.
I was glad that Jeanne said, even if you don't have a project or company that would want to explore or utilize this, that you could also make a strong impact by joining a current impact fund or partnering up with an impact fund for your investments as well as your projects. So I think that's really good advice, and certainly it's a great way to get educated, right, Jeannie, to really understand how to the ins and outs in these types of funds and investments.
Yeah, great
Thank
point
you.
there, Will. So we've got the poll results here. I'm sharing with everybody now. You should see it on your screen. About 3/4 of our audience says yes to this question, that they do have a project or company that would benefit from impact investments. So that's phenomenal. So I'll turn it back over to you now, Jeannie. Thank you.
Okay, so 2 areas that I would mention. I mentioned that CIPRA legislation, which set up a fund in Treasury around social impact bonds or pay for success, pay for performance. It's called all of those names. And those partnerships are really targeting the hardest issues in society. It might be prevention, it might be diversion, but really some of the more challenging social issues that we face. And the financial success is linked to the measured outcomes. But more and more local governments, state governments are looking at pay for success. And we have a fund and we have a federal government that, through some research with OMB, has kind of endorsed pay for performance. So I think that is definitely something that we will see more of moving forward. And then the second is donor advised funds, which if you spend any time talking to a community foundation, you'll find that they have a number of donor advised funds, 121 billion in charitable assets. That was at the end of 2018. It's the fastest growing philanthropic vehicle. It's basically, as an individual, it's a tax-friendly way for you to set up a savings account to grow contributions that you can then designate how that you want them used for impact over time. So a really popular vehicle that a lot of individuals are using.
I've got a charitable checking account myself, and it's really cool because I can make donations into it, and then I can pop up my little thing and I can make, disperse out to the different charities that I needed to go to. And I get one statement at the end of the year.
Yes.
Anyhow,
Yeah.
just a plug for DAFs.
Right. Instead of setting up a family trust or something, you can set up a DAF. So this is really the universe of the different types of capital out there, either the tax credits, using the pay for success. We have lots of other federal programs in here, REITs, the small business investment companies. So there's a lot of different ways you could layer and leverage this. And I always like to talk about Baltimore. Baltimore gets a bad rap sometimes, but as far as innovation in impactful investment, I put them up at the top of the list. And so this is a redevelopment of East Baltimore, where they had a lot of social issues taking place, but they had anchor institutions, Johns Hopkins University and Johns Hopkins Medical, and then they had a number of philanthropic communities. So what's special about this is that at $1.8 billion transformation of a relatively small area of the city, 88 acres, including parks, schools, housing, research, space for small businesses, reinvestment fund to bring back the housing, just a huge, huge system change involving people as well as place. And I think this is a great example of how you would, if you don't want to set up an impact fund or you're not sure you're going to be an impact investor, you can join together with these other entities that are focused on it and still be part of the system change. This was such a troubled area, a very speculative plan. It required that public-private philanthropic partnership to make a change. And it required really working with people. The Annie Casey Foundation invested heavily in the people in relocation, as well as wraparound services as they moved into new housing. So completely reimagined, a somewhat equal partnership among the different types of capital, and a lot of different financing tools that were layered and leveraged with this. So you had new markets tax credits, you had federal empowerment zone funding back from the 90s, as well as a state enterprise zone. A lot of philanthropic investment using endowments in this process, and a lot of CRA. And you had a university, a medical center, and foundation using their endowments in really interesting ways for impact. At one point, at low point in the market, a foundation actually stepped up and covered TIF bonds for the city to keep the project on track. So a lot of innovation around how different partners could step up and do impact investing. And I think it's important, if you're looking at projects in a community, look to see the foundations or some of the institutional investors that might be available. Universities and foundations have endowments. They're very motivated on social impact investment and could certainly be partners in a project. They have some tax advantages that allow them to make program related investments. So they could be that partner that comes in and helps with that needed equity or that debt at a below market rate to help make a solid project go forward that has that social impact. And then this is just the diagram. I've got the notation, and I think you all will get the PowerPoint, but really just a complex set of transactions in that layering and leveraging that had huge social impact, but not all of the players in this project were social impact investors. So certainly the dark blue boxes, which were the foundations, had a social impact motivation for it, but you had a lot of private sector real estate developers on the housing side that weren't set up that way, but they were able to partner together to really create a great deal of social impact. So I think this is just a good example of whatever the project is you're working on in an OZ, look for those foundations, look for the public sector tools, look for those anchor institutions that you might be able to team up with on the impact investing side. And I'm going to stop there and see if you have more questions.
Fantastic. Well, Jeannie, that was incredible. Thank you so much for presenting today. We actually do have quite a few questions, and if you do have a question, we're going to spend the last 15 minutes or so here. We're going to try to wrap up at the top of the hour, but we're going to spend the last few minutes here answering questions. So use the Q&A function if you do have questions for us. Before we get going on questions, I actually wanted to turn it over to Will for a minute because we want to plug a little bit more about this impact investing webinar series. This is just the first episode. There's going to be a lot more of these to come. So Will, can you talk about what we've got teed up, who we have up next, and why we're doing this?
Sure. Well, like Jeannie says, for replicating the urban and rural areas of some of the great tips and insights she just gave us, we want to do the same thing on this webinar series. And Crowdcreate and OZ Pros, which are partnered together with different functions that can aid in a beginning, middle, or end stage as far as what companies and projects need, and can advise, save a lot of time, money, and put in the right ingredients to make a successful project. So 21st of July is our next one. We're going to have Clint Myers as a speaker. He's a managing partner at Revolution Capital. Of course, that's Steve Case's series of funds, and they have 3 or 4 very active cutting-edge seed funds and opportunity zone funds as well. So we're really excited about our next speaker as well, and to kind of elongate this into not only real estate and urban areas, rural areas, but also to give the investors that are on board or the issuers that are listening right now or joining us too, a wider scope of resources and partners that they could pull from, draw from, or really tap and have invest in their project. So really excited about our next one as well as this one. Jeannie's doing a great job, so I'll turn it back to you.
Yeah, thank you. And really excited about the network of different investors and developers and entrepreneurs that we're developing here. It's great to see all the interaction in the chat and all the great questions we're getting. So before we get going with the questions, actually, Jeannie, a question for you. Are you going to make the slide deck available? Is it all right if I share it?
Yeah, I'll send you my updated version.
Fantastic. Yep. So yeah, that's been several questions we've had is I had a couple people say, hey, wait, can you go back to that last slide? Or, hey, are we getting the slide deck? So yes, we are going to get the slide deck out to you. Might not be immediately, but sometime later this week, you will get access to the slide deck. I'm going to launch our final poll question right now, which is, do you plan on investing in an impact fund or other type of impact investment this year? Again, totally anonymous, but yes, no, or maybe you're still thinking about it. I'll give you guys a little bit of time to think about that one. I'll keep that one up for a little while I start throwing these questions at our panelists here. Jeannie, I have a question actually, which is, how can investors add impact investing to their investment portfolios? We've got a lot of people here who are interested in impact investing, but they, and it kind of goes along with this poll question here. How can investors most effectively add impact investing to their portfolios?
I think, yeah, they need to back up, think about their mission, and come up with a strategy. And it would really depend on what place they're investing and what they're doing. I mean, certainly the easiest way would be for them to team up with an impact investor, but I can actually I'll add to that deck a whole model for how you would go through the process of thinking about adding impact investing to your portfolio. But the key is you have to think about the measurement of the impact.
Right.
So differently than you do in the more traditional forms.
Well, that dovetails fantastically into our next question, which comes from Stephen. He asks, how do we measure impact in order to attract impact investors? What are some ways you've seen?
Yeah, there's a lot of different ways you can think about it. Again, if you're looking at systems change for the people, place, and institutional, you're going to go through a quantitative and qualitative analysis of what that impact might be for that area. And yeah, again, I'm going to put a couple of extra links onto that deck so that people can take a look at some of the models for that.
Fantastic. So a lot of bonus resources coming your way if you register today. We thank you again. I'm going to share the results of our final poll question here. So we've got about a third of our attendees who are definitely planning on making some sort of impact investment this year. 41% saying they're still on the fence, still doing research. So a lot of people planning on making impact investments here in the audience. That's great. Let's get to some more questions here. We're going to go for another 12 or 15 minutes. Our next question is, actually it's not a question, but one of our attendees disagreed with you, Jeannie, on your characterization of opportunity zones causing displacement and gentrification. He responded by saying, that's not true about displacement being widespread. Per the National Community Reinvestment Coalition report on gentrification and disinvestment 2020, only 179 of the 8,764 opportunity zones are gentrifying, a huge percentage of which have seen no investment for years. So there are some zones that probably were not great nominations, but really the vast majority do desperately need investment. How do you respond to that, Jeannie?
Well, that really goes back to one of those provisions that was stripped from the original legislation, which made it much more specific how a zone was chosen. But I would say go read the Urban Institute's latest analysis of opportunity zones, because I think in the ones that have a great deal of that investment, you are seeing gentrification and displacement because investments are being made in places that were already growing and had that evolution taken place. So I disagree.
Okay, fair enough.
Yeah, but that Urban Institute, you got to admit that thing was hardcore slanted against. I mean, it's almost like they were just trying to poke holes into it and shoot holes in it from the whole article. They didn't talk about any of the good stuff that was happening.
But the way the zones were chosen, so governors made political decisions about how zones were chosen. No doubt. So I'm going to put one in every county in my state. So some zones were never going to get investment because they just were a zone that was in a county that needed to make the political equation. The ones with the most activity are the ones where we were already seeing gentrification in those low and moderate income neighborhoods. So, a lot of people want to put blinders and say, but my real estate project didn't help with that. But I guarantee we could trace that back and show you how it did lead to displacement. Rising housing costs being the primary culprit.
Yeah.
And I think that that's a bigger conversation relative to, in order to help these communities, there's going to be gentrification. I mean, it is just going to happen. And so I think that that's part of the process and part of the conversation that we as leaders in this group, and then as developers and that kind of thing in the opportunity zone space, it's up to us to be figuring out solutions to try and assist with that and to bring those to our projects. And I don't necessarily know that the legislation around it would have been, you know, I think it's a double-edged sword.
Yeah.
But
I'll tell you, actually, from a professional investor, a longtime investor myself, the examples of Baltimore and the wins are what supersedes that, because ultimately we're in an election year this year. I don't want to bring up politics and fiefdoms, because there's different politics in different fiefdoms, regions, and certainly pocketbooks, state pocketbooks and local pocketbooks that can support this type of thing. But the wins, just like in any investment class or space, supersedes everything. And the more wins you can point to, the politicians and other things, local and federal and everything, the winds will blow that way, and you'll have a backstop. You'll attract more private capital. That's, you know, one of the main purposes of what we're all trying to launch here and get more vision for and more exposure for. So I just want to kind of throw that in, because you know, what gets paid gets done. And as we get more wins and more social proof and more activity and more votes, if that's what you're after, and that type of thing, more tax base, if that's what you're after, and sustainable, this is where it's got to go, because we all need it.
Yep, yeah, that's a great point there, Will. You're absolutely right. And Carl asked just this question. We already responded to it. He wanted us to comment on the Urban Institute report. If I can just get the last word on that. Yeah, I did think it was somewhat slanted. I know that they did not contact the White House Opportunity Revitalization Council, which had conducted a huge report around the same time that highlighted a lot of the good work that Opportunity Zones were doing. I am speaking with the author of that study actually for a future podcast episode. So I'm gonna talk with him directly about that and get his perspective, and we'll talk a lot about that report on a future episode of the Opportunity Zones podcast. I'm really looking forward to that, actually. So I've got a few questions here still from the audience. From John, he asks, what would you estimate impact investors are willing to sacrifice in their return expectations, if anything?
It really depends on the impact investor. So, you know, certainly philanthropy, doing an impact investment might be, you know, 2 to 3%. You might have socially responsible investors out there that are below market rate, 7, 8, 9%. It really depends on the investor and the project.
Yeah, could vary quite a bit with as the answer to a lot of these questions. It depends, right? Mm-hmm. Jack asks a question here. He asks, can you, and hello to Jack. Jack's been a longtime listener to my podcast, and he's local here in the DFW area. So glad to see him in the chat room today. Can you speak to the correlation between the growth of impact and ESG investing and how they can benefit from the OZ law? They seem to be the perfect marriage for long-term investors.
Well, I think they are perfect together. I just think that unfortunately because of the simplicity of the OZ provision, you don't have the incentive to go to that impact investment. Even a simple change like using local businesses in your project as a requirement could help grow local businesses in that community. So, I mean, I could go on with a list of ways to improve that and provide relatively simple incentives that if you're not thinking about it in terms of impact investment, you might not make those decisions. So I do think they're a perfect marriage, but I think we've got a lot of people that aren't, their mission is not focused on impact investing. And we also have a lot of players that haven't teamed up with philanthropy and some of the other institutions that are on the ground trying to do the impact investing.
Right. Here's another question. This one from Charles. He asks, I was approached by an African-American sculptor that has new demands for her sculptures due to the Black Lives Matters movement. How do not-for-profits benefit how do not-for-profits benefit by the OZ funds, or are there other tools? So I guess he's asking, how can not-for-profits benefit from Opportunity Zone funds? And I'll open this to all the panelists if Ashley might have some thoughts on this too.
Yeah, I mean, I would say nonprofits would be a partner that you would bring in. So it might be a community development financial institution, it might be a community development corporation. CDCs can be excellent real estate developers. And so you might bring them in as, they're going to benefit from the partnership. They're not going to benefit from the tax side of the equation. They're usually recipients and partners with the philanthropic community and even the corporate community, and banks team up with nonprofits for CRA all the time. So they're going to be your partner that you use in an OZ deal.
Yeah, and in that specific case, I could see where the nonprofit could actually be the sponsor of a for-profit QOZB or a QOF if they were interested in raising money to kind of help her expand her, her business or something like that. That there could be a for-profit element to that, to where she's, creating these sculptures and then selling them and generating profit via that mechanism, and that the nonprofit could be affiliated with that as a sponsor or something along those lines.
And that's a smart thought, I think, Ashley, from you, just from my investor point of view. Basically, when you could bring in your foundations, you could really consult with a lot of your support, philanthropy support, because they're all tied to, most of the bigger ones or even smaller ones are tied to a variety of local and national charities and certain projects that they may want to have some affiliation with your project. That just seems like it'd be a natural door opener of alliance to get not only their attention, but to also add that function. Am I thinking right there too?
Yeah, and I want to point it out too, that so Jeanne brought up the Rockefeller Foundation about the principal guarantee that they were providing. So folks that are on this webinar, to the extent that you have a local nonprofit foundation or other group that would be amenable to providing a principal guarantee like the Rockefeller Foundation, I mean, that could really drastically improve your chances of being able to raise money, because it provides a principal guarantee.
It's a backstop.
To the extent that there's any relationships on the line with something like that, let's get on a call and let's talk about how we can bring those folks to bear and utilize that as an additional resource to try and get this impact out.
Absolutely. Let's move on to our next question here. We've got a couple more minutes to the top of the hour. We might go over if some of our panelists want to continue with us here. This next question, though, comes from Steve. He asks, OZ fundraise within large financial management institutions focus on investing their clients' funds within conglomerate real estate developers or companies, but how can the Opportunity Zone program help a startup developer? Ashley, maybe you have some thoughts on this one.
I was just going to say, well, we set them up all the time, right? And the whole notion of this is that it's fairly easy to do, and you can set up a QOF and a QOZB and comply with this without too much difficulty. And so it allows you, and that's one of the things that we've tried to make it happen, is to provide a cost-effective means for being able to do that. And so it then allows you to tap that capital. Now, you got to go about it the right way, and you got to have a concerted investor outreach through the groups like Crowdcreate and that kind of thing to coordinate that. But it does provide a streamlined basis for how you can get your deals in the hunt and get them out there where you're looking for capital to bring into them.
Yeah, I'm going to just jump in too. One of the reasons we partnered from Crowdcreate with OZ Pros is because we all bring something early, middle, and late stage to the table as far as giving, finding the vision and need and of a founder or issuer, and developing a custom strategy that can really give you a full roadmap, blueprint of exactly how it's going to happen, when it's going to happen, and who it's going to happen with, whether it's capital you need or strategic partnerships or whatever, many of the things that Jeannie's given us ideas on today. So the custom roadmap, the thoroughness, and really the advice on the strategy that our two firms can give is one of the things that we can really not only save you time and money, but put the right pieces together for profitability and sustainability. So I'll get that plug in there, because I know we've helped a lot of people in that startup position.
No, that's great. And we We are at the top of the hour now, so if anybody has to hop off, I won't hold it against you. Jeannie, Will, Ashley, are you willing to hang around for a few more minutes, see if we can answer a few more of these questions here? Okay, great. So next question comes from Wayne. He asks, and this is going to be for you, I think primarily, Jeannie, impact comes in many forms. Are there any specific types of impact that our investments should be geared toward?
Wait, say that again.
He says, impact comes in many forms. Are there any specific types of impact that our investments should be geared toward?
Is that with respect to OZs?
He doesn't say OZ specific.
So I think it depends. I think it depends on the project and the place. So typically, we're talking about the different types of capital: human capital, social capital, and the environmental conditions. So I think it would depend on the investment, the place, as to how you'd figure out what that impact might be on that community.
All right. And what are some examples of what you are seeing, the most needed type of impact in some different locations? Can you provide some specific examples?
Well, yeah, I mean, certainly there's not many communities. I guess this would go back to the discussion with the person about the gentrification.
Mm-hmm.
But in urban areas, there are not many places that don't have a need for affordable housing or workforce housing. So in terms of impacting a person's health and what we call the social determinants of health, that housing that's environmentally safe, that's health-wise safe, that's brought up to standard, that can be some of the most impactful. Along with that would be jobs, whether it's the creation of some type of hub, an accelerator that creates jobs, some kind of community vision for job creation. The health and the jobs would be at the very core of the impact that you could offer up in a community.
Fantastic. Nick and Bart have teamed up on asking this question a couple of times in here. They want to know if there's a list of accredited impact investors. Nick follows up by saying, if that list does not exist, what is the best way to raise capital for these types of projects? How should the developers and entrepreneurs reach out to potentially interested investors?
Yeah, so you can find a list at the GIN, so the GIN, GIIN.org. They're the ones that do the survey. You can find a list of all of them. It'll include philanthropic individuals as well as funds. So I'd say you can look at the list, but you should also think about where you're looking at a project, what's needed in that area. Find the community foundation, find the hospital foundation, see if there's conversion foundations that were created from the sale of hospitals, universities. So look for those institutional investors as well as those philanthropic investors. And from there, you're going to find individual investors as well.
Yeah. If I can't resist, I'll jump in there too, because one of our secret sauces at Crowdcreate is our very dedicated, experienced data research team. And so if we don't know them with our 45,000 investor contact list that we've had some interaction with, then we have a very experienced data research team that will really save time and effort and really connect with the right resources that can verify that they're active in a certain area, in a space, and that they're real asset allocators or strategic partners and capital partners or strategic partners. So the time and element that you can drill down and put that to work is well worth it, along with what Jeannie just said.
Yeah, that's a great resource. I've just attached the link to the GIIN.org in the chat window, so our attendees can just click there. That's the Global Impact Investing Network. That's a great resource, Jeannie. Thanks for sharing that with us. I've got a question here from Jim. He asks, is OZ investment helping on the rural broadband front? Are investors looking at fiber investments in general?
So I know Jim Stritzinger. He's the mapping guru of South Carolina on broadband. So the answer is yes. So Community Reinvestment Act Broadband is included as an investment banks can make. So you have a number of banks that are part of cooperatives and they're doing investments, they're paying for studies. But you've got so much federal money involved with broadband, and he knows this, through NTIA, through EDA, through USDA. So you've got a lot of heavy investment in that infrastructure really coming from federal sources. And there's more to come down through the FCC funding that's available, $22 billion. So you've got a lot of money already out there for the infrastructure. But what I would say is you could use some of that OZ investment to layer in on the digital inclusion side, on the programming side, to help with that. There's a lot of funding out there for broadband. Hopefully, rural business investment companies would be funding in that as well. But there are some specific OZ funds that are only interested in broadband investment.
Good. I've got a question here from Eagles. He asks, is there a credible third-party organization that can evaluate Opportunity Zone projects for social impact?
Well, we mentioned a couple of the evaluators. So one of the challenges, we could all argue for days about the gentrification and the zones and all, but one of the big issues is that there's not a lot of data available. So it's really going to be after a period of time when we really have the data to do a full analysis of this. But you could get help at a university. So a lot of universities have labs that have been looking at these types of projects that could help you with that structure for the measurement and the evaluation. I think looking at the GIN, I've got a couple other resources I can send on playbooks on impact investing that can help give some guidance for how to do that.
Yep, that's a good answer.
NES has also got some resources on that as well, Jimmy. And then there's actually a software company out of Huntersville that's working on kind of a software solution along those lines too. You got to love the North Carolina folks representing up in here. We got, software companies, we got Jeannie at Chapel Hill. We got other folks at Chapel Hill making it happen.
Well, I think we're at 8 minutes past top of the hour. We're going to just do one or two more questions here, and then we'll cut everybody loose. Will, were you about to say something?
I just want to say there's an Opportunity Zone accelerator up in Utah that we're all working with here. And one of their projects is an AI project that has been 80% of a prediction for the success of a capital raise. Now, some other elements may not fall into their bailiwick, but for the last year or so, they've had very credible success in predicting the outcome and success for for different projects. So there's a wide variety of AI, blockchain, lots of different functionalities out there that are in the works, and many of them are part of Opportunity Zone incubator accelerators that have credibility. And I think this next 6, even 12 months is going to be a wonderful time to have a variety of tools that we can highlight on shows like this, and with experts like Jeanne Bonds to have everybody take advantage of and make sure they're successful in there.
Agreed. Thank you, Will. Just a couple more questions here, and then we'll cut everybody loose, I promise. Patrick asks, aren't the impact factors part of the responsibility of the local planning and permit authorities and others in a project? Qualified Opportunity Zone rules do not need to play all the instruments in the band. It is primarily a capital driver. We need the other stakeholders to play along as well for impact. Anybody have a response to that? Jeannie, you're thinking about it.
Well, I'm going back. The OZ provision is what it is. I definitely think it could have been shaped a little bit better in terms of where the zones were and what was taking place. Because one of the problems with OZ, if I'm looking after the community, is that it raised expectations. And for a lot of those places, those expectations will never be met. And so that's kind of my issue with that. So I would say that you still have to go to these other institutions to help put the deals together, because there are very few places that don't have some type of institutional investor or philanthropic investor something that's looking at those projects. So you still really do need to team up with those other players in the market.
You know, I'm going to continue to beat the drum on leadership, right? I mean, part of this is that as leaders within this space and as fund managers and QOZB operators and other people that are putting deals together, we've got to be focused on the impact. We've got to be focused on telling this story and telling how and showing how we're actually benefiting our fellow mankind. And then if enough of us start doing that and enough of us start talking about that, that's what goes to counteract this stuff. And that's the way that we achieve the desired result without having to go back. And that's the instant fix, right? Yep. You know, without legislative input and that kind of thing. If enough of us actually start doing good with this program, it then accomplishes the desired result. So I'm gonna keep banging that drum every time I get the chance.
Yeah, facts
right on.
Sell, but results and stories sell. The oldest adage in the world, right? The more we can point to Baltimore's and those types of things and use resources, it's a cure-all. And especially, like I say, with many of the tides changing this year, going into several years from now, you know, towards social impact investing, I think this is definitely the time to implement a lot of things that Jeanne shared with us today and make a difference, you know. Do well by doing good and make a difference. And that's why I'm voting for the Ashley Tyson Jeanne Bonds ticket. Next election. So
that would be a good one. That'd be great.
Yep, you heard it here first.
All right, one final question. This one's from Eric, and then we're gonna end this thing. Eric says, private capital gains dwarf impact investing. Isn't it important for impact investors to actually make it easier for working with the investor community rather than more difficult? What would your top 2 requests for investors to ensure low-income residents benefit from OZ investments?
So I would say communication with the community. So don't be the investor that buys the building or wants to do a deal who never comes into the community and meets the community on their own ground to ask them what they want and need. That can be the number 1 step to being most impactful. And then second would be not only meeting with them and hearing it, but collecting what it is they really need. Is it not just jobs, but jobs that pay a living wage, not just housing, but housing's better than the housing that's there. Is it a transportation system? Is it the broadband? Is it a health facility? And then from there, you can go to figure out what other programs there are that you can pair up with to make the most out of that investment.
Yeah, that's great. And, you know, I might just chime in there. You know, one other thing that can be helpful in certain communities is a certain degree of workforce training. You know, a lot of these communities need, you know, qualified workers to be able to work on the projects, whether it may just be even construction work. If you can educate some tradesmen in some different crafts. I spoke with a fund manager earlier today who's doing this in Cincinnati and around the country, actually training the workforce in the local communities, getting them off the streets, even training homeless individuals to be able to help on these projects. I think that can be an impactful way to do it too. It's not easy, right? It's not the easy answer. It's harder to do, but it'd be highly impactful for the local community.
You can build that into your project. Cross Street Partners in Baltimore has that whole training in the Hone Lithograph building that they're redeveloping. So they put that in there for plumbers, electricians, a training program. So you could build that into your project and achieve social impact that way.
Yep.
Couple that up with, and similarly in the rural areas, you know, you can have a blue collar accelerator where you have training as part of that. You have a call center, you know, where you drop and you actually provide that as a resource. So
that's great. And she said an important thing. I've raised a lot of money in my career by including local investors. Started many years ago in the 80s in cable TV. And even though we'd sell 60% of it to the you know, the fat cats in New York or whoever we had on the line, we took 40% of each partnership and made sure that the local investors and communities could participate in the profits and also then in the decisions that would be appropriate for that community. And we did a lot of second and third tier cities and areas, and it was very successful, and it's still successful today. So I commend you, Jeannie. That was really good information.
Yeah, fantastic.
Thanks, Jeannie. I love going back and forth with you, right? And the opportunity to do so in a great, environment. So thanks again, Jimmy, for facilitating this.
Yeah,
Yeah.
thank you, Will. Thank you, Ashley. Thank you, Jeannie, especially Jeannie, for presenting the slide deck today. And thank you to all the attendees out there. We're going to be returning on July 21, as Will mentioned earlier, with Clint Myers from Revolution Capital. We'll let you know more about that via email in the coming weeks. And until then, take care, everyone, and have a great week. Thanks, guys.
Great. Take care,
Cheers.
everybody. Thanks, Jeannie.
Thank you.
Jimmy.